Good afternoon, traders. This is Christian from Target Trade Group, and this is your end of day recap for what is today's date? It is Wednesday, November 9th. All right. Now that I know what day it is, let's start with today's video. I would classify today as pretty much risk off. We'll go through some of the price action here. Let me just mute my TV over here. But overall risk off. Look at the indices today. SPY down 2%, Q's down 2.3%. Small caps down even more today. They were down 2.7%. I was talking about this morning. Let's see if I can bring this up really quick. I was talking about this morning how the small caps look like they lost upside momentum this week. So that even kind of proved more today, because both the small caps and the micro caps really underperformed today. Micro caps, that's the IWC ETF, was down 3.7% for the day. The story of the day continues to be this Bitcoin breakdown. It just doesn't feel very good in terms of, I mean, look at the move right now, down 15% and on the lows. A couple things before I kind of get into the implications of this is that we talked about how this was the slimmest value area that we've seen in some time. And when you get these very thin value areas, you could see a very big move. Notice that we got a little bit of a fake out, right? This started to kind of resolve itself to the upside. And it is very easy to cross the value area back to the downside when it's that thin. I think I went over this in yesterday's video, but I'm not 100% sure if I did or if it was in another video. So just kind of going through it once more. But yeah, so the implications of this is, I hate to compare this time to other time frames, but I know everybody wants to compare certain things that are going on right now to like 2008, 2009. We know that the banks are not the situation. And again, like a lot of times when you have corrections or steep pullbacks, right? People like to go back to what they know and what is in their memory, what they felt. And a lot of times, you can't really, for traders that experienced 2008, 2009, they are not going to lose. They're going to remember that feeling for a long time, because it was a nasty situation. There was bank after bank that either went under or was in trouble. Mortgage companies, a ton of them went out of business. Insurance companies, remember what happened with AIG that had a big bailout and so forth. So the situation, what we're dealing with now with this big market pullback correction that we're having, bear market, call it what you want, is that it's not the banks that are in trouble. Back then the banks had this huge leverage in the mortgage market, and that's different now, but it doesn't mean that there's going to be some other situation. And right now it's kind of revealing itself as one thing that's really coming undone very quickly is the crypto market and what's going on in Bitcoin and some of these companies that have very decent leverage. So I'm not going to name all these parties because I'm not a crypto expert. I actually don't own any Bitcoin. I did own some Ethereum for a while, but basically use the technicals to stop myself out of the trade when I did have some Ethereum. But you could see the volume on this move down. So the question, whenever something like this happens and when the speed really picks up down 15%, and couple this with yesterday, I think that's down over like 23% is what I think I just tweeted out a little while ago. 23% in 2 days. What happens is often people shoot first and look later. Meaning any other company that has anything to do with cryptos, there is just selling in, right? And that's also somewhat, now again, like history rhymes a little bit. That was the situation back in 2008 when one bank or two got into trouble. They started to sell every single one because you don't know who had what exposure, and that you knew that wasn't going to come out for a while, like in terms of who knows what. So there was just relentless selling back then in the financials, like every bank. And I remember Morgan Stanley going down to the single digits. So again, I'm not trying to say that what's happening is the same thing or so similar, but there are similarities, and people like to look for similarities from one time frame to the other, because you kind of feel like, oh, that's deja vu, in terms of all these big crypto companies losing a lot of money. So will that spill over to the broader market? I think that for the time being, we are seeing some spillover. It depends on what company has what exposure to these types of things. So, the obvious ones are coin. That's been coming undone. Another one too that made a statement today talking about how many assets that they have and their liquidity. This is Silvergate, which was down 12% today. Remember that speaking of, so again, like companies having to come out and defend themselves, that also we've seen that before. That was also done in 2008, 2009. Remember, Lehman Brothers came on several times and said, hey, our liquidity is fine, and so on and so forth. So you just kind of have to watch, be mindful of your risk, like anything else. This market moves incredibly quickly right now. Once it wants to make up its mind and go a particular direction, but I don't know. I mean, BAC and JP Morgan both have been saw put buying yesterday. Oh no, it was Monday, and then BAC actually saw a little bit more put buying yesterday. So I would keep an eye on these. I mean, it wasn't cute, ginormous put buying, but we did see some put buying in the banks. And again, I don't know, I'm not an analyst, and I don't know, if these companies are holding, how much crypto exposure that they have. But I would just be mindful of that, because if you look at these, and if you're holding some of these, banks or whatever, they're all up pretty decently. So there's no real damage done at this point. So like even those puts that went up, big puts went up on Monday, they haven't made any money in those puts from where they purchased those. So just keep that in mind. Okay. Yeah, so that's typically what happens. We can now kind of go over the indices and kind of, it's amazing how with this market and the way that it moves, just one day, and we're sitting above, we got back above the 50-day moving average. We got back above the November value area, but all it takes is one day for these things to kind of come back undone. And lose that support and then look like a different picture, right? And that's the case sometimes with bear markets, when you just don't have that much of a room, how much don't have that much room after a little bit of a move up. But, we talked about in yesterday's video that this could be a lower high yet. We don't know until we take this level out, and we haven't taken it out. It looks like we're turning back down and we're back inside value. So remember, like the two main events for this week, and this is the funny thing about trading, but the two events for this week were obviously, number one, the midterm elections, which are now, wrapping up, even though we don't know the results of all the states. But the other thing is the CPI report, which is tomorrow. Right, those are the things that we kind of knew coming in this week. But there's always the unknown, and there's always something else that could happen. So just a lesson that I've learned in trading. And why, new traders kind of fall victim to this sometimes, where they think that they can plan out everything that is on the calendar, right? Oh, I want to know what this is, or I want to know all these data points and so forth. But sometimes there's unforeseen events, and that's always, that's why the markets are always so interesting and dynamic. And you just have to be able to adjust on the fly as things change and as there's new developments. It's always been the case with markets, and it always will be the case, is that there's no way that you can predict. We were talking about this in the trading room, views for going out for, a couple of weeks, a couple of months. It's very difficult to understand what's going to happen on a day-to-day basis, never mind in a month, because again, the market dynamics change very quickly, right? And that's why we do look at some things like the value areas for the month and the moving averages, because I do make, especially in the market that we're in and how fast it does move. Did I mention that enough in this video, how fast this market is moving? But that is the situation of how quickly things move, and especially in a bear market, which things do move quicker. We still are at, even though the VIX has come in from around a 30 level, we're still at a 26. That's higher volatility than normal. So as soon as I see a fracture of support, I kind of look for the exit in terms of my swing trades. Even though I still have a hedge on, which is SQQQ 3 times short the Qs, which has been working out really nicely, but overall, like swing trades, they just have to be abandoned pretty quickly. Let's get over to the Nasdaq. This is where we've talked about how it's been showing relative weakness, and this is now back below. And again, it kind of looked like, which I think we went over yesterday's video, that we were talking about how this could, easily, this little move up here could easily be negated and a move back down, because again, we haven't really regained any territory here. So we got to close now below the value area. That's 10,918, or if you like the Qs, that's 266. Right. And we lost the value area again. So again, relative weakness, and pretty darn close to those lows. Let's look at small caps really quick. They had been, like I said, they had been looking a little bit better than the S&P and of course NASDAQ, but they lost momentum. And this happened after Fed, when everything went down, right? The problem it just didn't bounce as much as everything else did, right? And then finally so that also has moved into the value area. Dow stocks were also down 1.9%, checking right back to the 200-day moving average. One area that I thought was pretty interesting today that you're probably not going to hear that much about, because everybody is focused on what's going on in the crypto market and ripple effects in that situation. But look at what happened with the energy stocks today. XOP was down 6.6%. There's no cryptos in energy stocks, but sometimes this is just basically, well, a couple things. Crude was down pretty decent today. So we can look at these charts really quickly. Crude was down 3.8% for the day. Also did not get out of the habit here of getting out of this pattern of lower highs. We got close. That's around 93.60, 93.70. We kind of touched that area and got rejected and moving back down. And again, just a matter of just a couple days, something that looked like it was kind of moving higher out of this base is now back below this 50-day moving average and back inside the value area. Nat gas too. Look at this. This has been, that big move the other day where nat gas was up 11%. That has been all taken out as well. This is not a crypto. This is not the nat gas futures. That may have moved almost as much as the cryptos in the last 3 days. So bottom line is you got a lot of volatility going on. The dollar is one other quick thing too. Remember how we talked about, pretty positive to see the dollar come down here. The dollar was up 0.75% today, reversal off of the version point of control, which we talked about yesterday. So we'll see. 29.95 as well as the 50-day moving average could be a test. It could come up here and fail and start to go back down again. That's also a possible scenario that we just don't know about yet. Wait till we see if we go a little bit higher into that 50-day moving average for the US dollar ETF. So yeah, so I find, going back to XOP, right? The energy stocks did get overbought, and that was specifically, why I had a swing trade on yesterday, and I was kind of said for a while that I wanted to be, using the XLE ETF as my way to kind of, have a good exposure into, for energy. But I just thought things had kind of run its course. I thought that, hey, I might miss out on a little bit of upside by getting this trade-off. But, in this market, you just have to be active and have to be selling. Now I could look, now that we've burned off a decent amount of those overbought levels, we'll keep an eye on crude. But, now I kind of want to be thinking about re-entering, provided that we see some stabilization here. I don't really like when we lose, I was looking at 89.39 as a possible level where we can bounce. We didn't. So what did I do? Nothing. And I'll wait for tomorrow, because this 87.30 VPOC could be taken out too, right? And that would kind of still get us, we would still be above the value area for the month. So be patient with these things. But, what do we know about energy stocks this year? The dips have been bought. So, whether it's a one-day dip, couple-day dip, it's something that I'll definitely be watching for a re-entry point. All right. I mentioned, listen, I show all my trades in here. Not all of them, especially today. I had a nice trade in the CSIQ today, but did not have a good trade in CALX. This was a name that I had been long, was actually looking to add to it, just got in a little bit too early. Now, I'm going to be watching this one because it did what I kind of wanted it to, but it went through my stop price. It filled the whole earnings gap. So I've got to see this get back above 65, and then I can maybe try again to see if we get a bounce. But I've played this name a few times over the last couple months. Couple of times it's really worked. A couple of times it hasn't worked. Today was one of those times that it didn't work for me because I was positioning in here for this thing, and got stopped today on it, but it did fill the earnings gap and bounced. 65.35 will be something that I'll be watching. I mentioned I've got my SQQQ position on. I actually added to that yesterday. That's worked really well. Unfortunately, a couple other ones. Again, this is all about risk management. This isn't to mess around with when the market decides it wants to turn. DXCM does not look horrible, and the fact it may come back, but it wasn't that strong yesterday. It didn't give me, I was able to take one target in this swing trade, which I added around like 115, I think on Friday. And for now, I'm just being conservative. If I see that this market looks really weak, I'm out, right? Harmony was another one that looked pretty good yesterday. It looks like I made the right decision in terms of where this thing closed for the day. Ended up closing down 2.7%. And a couple other trades that I was in, just really reduced risk, which I wanted to do in any event for tomorrow's CPI report. That's one report that we know that is coming. So we'll just kind of have to see. Now, here's the CPI report for tomorrow. If it happens to come in really light, there'll be plenty of time to be adding risk back, right, in this market. And I put on a small call fly, just in case. The call flies, I had a really nice one last week, which was a put fly in the Qs that worked extremely well. And we detailed that in a video that I put out on my YouTube page. But, so I put a small trade on here, just risking like 17 cents in case it does make a big move. I do have some exposure. If not, I lose 17 cents, right? Very nice, easy way to do that. XLV, by the way, was another trade that I exited. Notice I exited for around my cost basis. This was something that I took several targets in, right, earlier. But the problem with this is now the ETF isn't overbought, but when you look through some of these names that are in the XLV ETF, an Amgen, right, a Merck, right, these things all look very, I don't want to say toppy, but they're extended at this point, right? Lilly's another one. Bristol Myers is another one, and this actually finished down on the day, right? These things have had colossal runs. In an overall bear market, in my opinion, you have to be selling some of these things at some point, right? You can't let things like what happened to XLE and XOP happen after, this name has gone up. Gilead has gone up from 70 bucks to 82. All right. So in any event, we'll see what tomorrow brings. Again, today wasn't a great day for me. I lost a little bit of money today. No problem, right? You have to get kind of accustomed to that in 2022. Not losing money, but understanding that you're not going to have great days every single day. of the week and of the month. So yesterday was a really good day for me. I made more money yesterday than I gave back today, so that's a victory. And my risk is very, very light at this point. All right, guys, have a great night. And again, just roll with the punches with this market. If you made a couple bad trades here and there, it happens. I try to say that almost in every one of these videos, that just be realistic with this market and how quick and vicious the turns are right now. This will eventually change, right? And bear markets do end, but right now, being very quick, nimble is the name of the game right now until the indices get back above their 200-day moving average. All right, so hang in there. And if you made some money on the short side and some of these things that are just really going down very quickly to the short side, congratulations to you. Have a great night, everybody. See you tomorrow.